Hi friends, welcome to Adda 24/7. We are in the most important question series for BFM. It is for all the subjects. I am covering ABM and BFM. So, we are covering basically the important questions and the case studies. I've covered case studies also in my earlier lectures. Follow the series completely. Follow this video till the end. Share it with your friends, share it on all your social media platforms, like the channel, subscribe to the channel. Click on the bell icon. Okay, let's start. Which of the following statement about the correspondent banks is not true? See, here in exam you have to always focus on whether the question asked is positive or negative. Now what do you mean by positive or negative? If they ask you what is true, what is correct, which of the following are the points, that is all positive. Which of them are not? Whenever you see any negative point, kindly think of it whether it's positive or negative question. Accordingly answer, because sometimes what happens, even you know the answer, but then also we miss out because of means we get it wrong because of we didn't read the question properly. Okay, so now we want not true. Correspondent bank provides services as agents for collection of export bill, import bill, as well as checks in their country. So they act as the agent. So what is a correspondent bank basically? See this example I'll give you. Suppose I'm in a bank X over here, or let me call the name only PNB. I'm in PNB over here. Okay, I've sent the documents to some USA. Okay, USA. I've sent the document. So there Citibank will be acting as my correspondent bank. It means it will do all the further jobs over there. Documents, getting the sending it to this beneficiary seller and all the remaining parts. So it is just acting as my agent. So it acts as the agent. So that is true. So now see here, I want the answer from your side. I won't give the answer now. Correspondent bank uses only a single currency for transaction. You want not true. Huh? Correspondent bank acts as a middleman between different financial institutions, means middle person, a broker type person, and all of the above are true. So which of them is not true? Not. Which of them is not true? Yeah. Check the question, everyone. Which of them is not true? It is this. This is false. Why only single currency? If the correspondent bank is dealing with various countries, okay, or for the same transaction with different countries, so it will use multiple currency. Remaining two are correct. It acts as an agent. This middleman is also an agent only, isn't it? Got it? UCB 600 defines original documents with more precision. According to UCB 600, which of the following is considered as an original document? So what do you call it? Which document will you call it as original? Any document bearing an apparently original signature, mark, stamp, label of the issuer of the document, unless the document itself indicates it's not original. What do I mean by this? See here, original means what? Where I have signed it with my hand, physical sign. Okay, that is original. Or sometimes nowadays we have that perforated signatures, that this is a system generated document and does not require the signature, that sort. So that is also original. So any document which is presented to you as original, okay, which bears some notation, signature, mark, stamp, label, original stamp, that will be called as original. Only if it is written on the document that this is not the original, this is a copy, if it is written on it, then you will have to consider it as copy. Second one, any document that appears to be written, typed, perforated, stamped by the document issuer, means if I write it in my handwriting, so will it be an original document then? If I write it something in my handwriting, so it will be original. Any document that appears to be on the document issuer's original stationery, means if it appears to be on my letterhead, my own letterhead, Then also. So which of them is true? Which is the original document then? Is it A or B or C or D? All of the above. What do you say? Comment section. Everyone in the comment section. What do you say, guys? It is all of the above. Okay? All of the above. All of them are originals. Okay? See this. All of them are originals. Kindly note the five important subjects which you have to study. This is not there in your CIB that much. It is just a part of that. But international trade is governed by these five documents: UCP 600, ISBP 821 now, ISP 98, URR 725, and EUCP 2.1 now. Now ISBP and UCP are same, means they are supporting, means ISBP supports UCP. ISP 98 is for standby LCs. URR 75 is for reimbursing banks. What is reimbursing bank? When we use the LORO system. LORO. Remember, get back to that LORO system. Nostro, Vostro, LORO. When we use LORO system, then we use the reimbursing bank. And EUCP 2.1. This is for e-transactions. Nowadays, everything is coming online. No physical documents in international trade. So EUCP 2.1 governs that. Okay. Which of the following is a capital instrument permitted for receiving foreign investment in Indian company? So basically, how do I get the foreign investment in my company? Number one, government securities. Number two, treasury bills. Third is equity shares. And fourth is all of the above. If I am having a Reliance company, let's say I am the owner. How will I get the foreign investment? Through government securities? Government securities are my securities or someone else's? Government securities are the securities of the government, not my. I am the owner of Reliance. Let's say, if I would have been the owner of Reliance, I wouldn't have taken these classes, isn't it? Simple. So, government securities are not mine. T-bills. T-bills are also not mine. T-bills are issued again by RBI on the behalf of government. So, both of them are government securities only. T-bills are short term, within 1 year, and government securities are long term generally. But both are issued by the government. Third one is equity shares. Yeah, that can be true. If I am the owner of Reliance, I can get the money through the foreign investors by selling my shares. So, this can be true. So, true. So, which is permitted? Yes, equity shares are permitted. Okay. Which of the following is true with respect to the risk mitigation? Now, let me explain you this question. Explanation is important in this. Okay. One sec. Hold on. Yeah. Now, what is true regarding the risk mitigation? It reduces the downside variability in the net cash flow. Reduces. Risk mitigation can also be done through diversification. It reduces the risk by reducing the probability of its occurrence, and all of the above. So many of you might have seen the answer now, right? So what is the answer? See this, all of the above. Why all of the above? Because see this, mitigation means what? Mitigation means reducing the risk. How do I reduce the risk? I can reduce the risk using this. Means firstly, you tell me how do I reduce the risk? I reduce it using the collateral or the derivatives or diversification. There are two levels of risk. One is at the transaction level, that is at the branch level, and second one is at the portfolio level, HO level generally. At transaction level, we reduce the risk by taking collateral or insurance. Okay. At the HO level, we reduce the risk using your portfolio diversification or your CDS, credit default swap. So let's come back to this question. Risk mitigation reduces downside variability. Downside variability means negative flow of my cash flow. It can be done through diversification. Already I have clarified it can be done. Generally, it's done at the portfolio level. It reduces the risk by reducing the probability of it occurring. Probability. Obviously, it will reduce the probability of it occurring. Why? Because I am taking derivatives. By taking the derivatives, I am safeguarding myself. Okay? So all of the above is the answer. Now, before going ahead, everyone kindly subscribe to the channel Officers Adda 24/7. Okay, Officers Adda 24/7 English channel. Join the crash course starting from 11th October. Join it ASAP. Now, huge discounts are going on. Right now, if you see, you're getting almost double validity in Mahapack. Means you buy for 6 months, you get it for 12 months. You buy for 12 months, you get it for 24 months. So join the Mahapack. I'll show you at the end how to join it. Okay. So definitely join this because days are limited now. Let's move on to the other questions. Rearrange the steps in the risk management framework in correct order. Now we want ascending. It's clearly mentioned ascending order. So you have to arrange this in the ascending order. Now look at the steps. Authorization of information system, assessment of security controls, categorization of information systems, implementation of security controls, selection of security controls, and monitoring all security controls. Now these are the options. Okay. So these options you can definitely have it. And first you follow this sequence and give me the answer. Think over it. What should be the sequence of this? Is authorization first, or is assessment first, categorization first, implementation first, selection first, or monitoring first? What should be the correct answer in this? Yeah. Think over it. What should be the correct steps? Yes. First is authorization or assessment or categorization or implementation. See here, look at the first word only. That much is enough for you because remaining things are okay. Authorization, assessment, categorization, implementation, selection, and monitoring. Okay. So first is what? Categorization or selection. Suppose if you want, if I give you some data, what will you first do? Will you select something first? If I give you 20 students to select and then tell you to select any 3 out of these. So firstly, what will you do? Will you start immediately selecting, or will you classify them first? You between 40 to 50 marks come on this side, or others come on this side, like this, right? So first always categorization is done. So one is always the step of categorization. This is always the first step. So now immediately what happens? Look at the options. A and C are gone. So this is A is gone and C is gone. Now B and D only. Second is common. Fifth, selection of the security control. So this is step number 2. After categorization, I'll do the selection, right? Third one is what? Now third one is again same. So implementation of security control. So step number 3, that is also same. Step number 4. Now look at where the difference. 2 and 6. Look at this. 2 and 6. Now here is a problem. Assessment of security controls. And here is monitoring of security controls. So which one will you do first? Will you do an assessment first, or will you do the monitoring first? Think over it. Will you do the assessment first, or will you do the monitoring first? Everyone? We'll do the assessment first, right? So assessment is always done first. So step number 4. Now I think so things are clear. So here you have clarified that D is out and B is in. Now look at the remaining one. One is what? After fifth step is authorization of information system. So this is step number 5. And what is the last step? 6th, monitoring. After authorization, then I have to monitor, right? So this is my step number 6. So this is the right sequence. Okay. First is always categorization. Second is always selection. Third is always implementation. Fourth is assessment. Fifth is authorization. And sixth is monitoring. Got it? Clear? Next. Which of the following are the objectives of using derivative products by treasury? Why does this treasury use derivative? To manage the liquidity ALM risk, to meet the requirements of the corporate customers, to trade in currency and rupee derivatives, and all of the above. What is a derivative product? Derivative product is basically, from your CAIIB angle, I am telling you, it is always used to hedge the risk. Hedge means what? Minimize. Hedge the risk. Okay? Means I'll give you a simple example. Suppose let's say I buy a Reliance share. Reliance. Okay? Reliance share for around, let's say, 3000. Why am I buying this Reliance share? I'm buying this Reliance share because I expect it to go up, okay, to let's say 4000, and then I'll be selling it, right? That's why I'm buying this. Now the problem is, instead of going up, if this stock starts going down to 2000, then what happens? So this is a risk to me. This is known as a risk. To cover this risk, what will I do? I'll buy a put option. Put option. Okay. So here I call this, whenever I am buying Reliance at 3000 and selling at 4000, it is called as long position. So whenever I am long in any commodity, I have to buy the put option. Always remember this. Whenever you are long in any commodity, buy the put option. Okay. So that will prevent your downside risk. Suppose if tomorrow this Reliance starts going from 3000 to 2000, in that case, your put option will go on increasing. So you'll lose on this stock. Suppose if the share goes down, so you'll lose on this stock, but you'll earn on this put option. So to manage the liquidity and ALM risk, that is right. To meet the requirements of the corporate customers, so that is also right. Because many of the customers nowadays, corporate means all these Reliance, Tatas and all the companies, they nowadays want hedge the risk. Okay, so meet the requirements. To trade in currency and rupee derivatives. So this is a proprietary position. This is known as proprietary. Means what? This is for the bank itself. This is not for any client or anyone. Proprietary position. Here the bank is planning to earn the profits in this. To trade. Trade means what? Trade on its own behalf. So this is also right. So answer is D. All of the above. Okay, this is the right answer. Got it? Clear, everyone? This is the right answer. Okay. Next. Which of the following is correct regarding the buyback of the certificate of deposit? So buyback, which of them is correct regarding buyback? Buyback means I have issued the certificate of deposits and I am getting them back. Buyback can be made only after 30 days from the issuance of CDs. It is to be done at a prevailing market price. The bought back CDs can be reissued. So which one is correct over here? Think. Which one is correct? Buyback can be done only after 30 days from the issuance of CDs. Means what? Suppose if I issue the CD today, CD means what? Certificate of deposit. So if I issue this certificate of deposit today, so I can buy this back. Buyback means what? I can tell the customer that, see, I have given you that CD, now give me my CD back. So this I can do after 30 days. 30 days. Okay. So I'll tell this customer, give me my CD back and take your money back. So this I can do only after 30 days. It is to be done at a prevailing market price. Means whatever, suppose if this, I had issued this at, let's say, 10 rupees. Okay, 10 rupees. And after 30 days, if the price is, let's say, 20 rupees. Okay, then I'll have to buy it back at 20 rupees. Okay, at the prevailing market price. Got it? Because otherwise, why will the customer sell me? Tell me the logic. Suppose if this is a customer, right? He has brought your CD, certificate of deposit. He has brought it at 10 rupees. Now the price is 20 rupees. Now you are calling that customer and telling him to give you back at 10 rupees. The customer will not give you back. Because customer will only give you back if you are buying at the market price, right? The buyback CDs can be reissued. Means the CD which I buy back from this customer, I can give the same CD to anyone else. Is it possible? Suppose if I take an FD from your bank and tomorrow give back your FD and get my money back. Logic clear? I'll give back your FD and take my money back. So the same FD receipt, can you give it to someone else later? That see, this person has given back. Now I can use this certificate, this FD receipt. So wrong, not possible. So the answer will be what? A and B. Answer is A. A and B only. Got it, everyone? Answer will be A and B. Next one. Which among the following is not an element of tier 1 capital? Not. Okay, not an element. Tier 1. Which of them is not an element of tier 1 capital? E, I'll give you. None of the above. One more option I'll give you. None of the above. Okay. Now, which of them is not an element of tier 1? Revaluation reserves, paid up capital, ordinary shares, statutory reserves, other disclosed free reserves. PNCP, perpetual non-cumulative preference shares. IPDI, innovative perpetual debt instruments. Okay. And E is none of the above. So, which is the correct option? It should be not an element. So, remember always, tier 1 capital will have all these elements. Here, what is the tier 1 capital? Tier 1 capital will have two parts. Always remember. One is CET1, common equity tier 1. And second is AT1, additional tier 1. Okay. Now in CET1, what do you have? First you have this step, this B. I'll just write this B now. You're having this B over here. B means paid up capital, statutory reserves and other disclosed free reserves. So B is there. Then next you have is net profit mentioned over here. You have net profit. Net profit. Okay. Net profit. So this you have. Reserves and surplus, R&S. That also you have. R&S, reserves and surplus. Okay. And last one is revaluation reserves. These are also the part of tier 1 now. Okay. Revaluation reserves. These are the part of tier 1. Got it? So that's why CET1 is this. And what is AT1? AT1 is PNCP, perpetual non-cumulative preference shares. And second one is IPDI, innovative perpetual debt instruments. So all of these are the part of tier 1 completely. So the answer is none of the above. E. Not an element. All these are the elements. Okay. Got it, everyone? Clear? This. Here, I'll clarify something more on this because CET1, many of us don't understand this. CET1 means or tier 1 means what? It is a free capital. Always remember this. It's a free capital. Free means what? Free means if I don't pay any interest to you, you can't complain it to me. That's called as free capital. That's my own money. There is another capital called as tier 2, T2. T2 is known as a paid capital. T2 is a paid capital. Okay. In T2 I have all the loans. If I take loan from somebody, so that loan, if I take some means a sort of money, okay, from in any form where I have to pay a fixed interest or fixed commitment, so that is known as T2. Got it? Clear? Move on. Next one. Which are the reinforcing pillars of Basel II? Now reinforcing means what? Important pillars. Reinforcing means important. Which are the important pillars of Basel II? Minimum capital requirement, supervisory review for capital adequacy, market discipline. So reinforcing pillars, only A and B, only B and C. I'll give you some more options. C is all of them. All of them. Let's keep them this much only, A, B, C. And D is none of the above. Chalo, none of the above. Now think over it. Yeah. Minimum capital requirement, supervisory review, market discipline, only A and B, B and C, all of them, None of the above. What are the pillars of Basel 2? You tell me, everyone. What are the pillars of Basel 2? Basel 2 pillars are the same three: minimum capital requirement, supervisory review, and market discipline. All the three are this Basel 2 pillars. Even Basel 3 has the same pillars. Now understand this, even Basel 3 has the same pillars. Only what is the difference between Basel 2 and 3? The difference is simple. It's not much difference as such. The point is Basel 3 is more precise, more accurate, more tough than Basel 2. That's the only difference. Otherwise, pillars are same, conditions are same, all the criteria are same, everything. Only they are more tougher. So it is all A, B and C. Okay, now it looks proper, right? Chalo. So now before going, as I told you, I'll show you how to join the batches. See, this is a crash course batch. Join it immediately. Just now it has started and the exam is near. It is to the point, very fast batch. Okay. Go to Adda 24/7. I'll always suggest you to go through the app. In the app, you get 1% extra. Click on JAIIB and CAIIB. Click on CAIIB November. Okay, crash course. Click on this crash course. Ebooks, test series, online live classes. Click on the English one, huh? English class. There are two, English and Hindi, as per your language preference. Ebooks, test series, online live classes, expert faculties, interactive classes, recorded sessions. Importantly, okay? And limited size batch. Kindly note. Click on buy now. Put the code Y432. Never forget this code Y432. Okay? Y432. Click on apply. Look at this, 77% discount plus 1% discount using the app, so 78. So join immediately. You can also join the Mahapack. In Mahapack, you are getting 15 plus batches per subject. Use the same code Y432. Never forget the code. Okay.